Today we'll look at a couple of markets that we've been following, and we're going to compare what came of them from the perspective of how the dominant and the supporting structures are giving us clues one way or the other. Here is the December euro currency. Now the currency, this currency started out, and we talked about this several webinars ago, where we had this super shallow situation here, looking like it can come up to here for a possible drop. Okay. Now the real kicker is this pattern right here. Let me draw it in using this. Okay. That's the pattern coming through, and that would be the dominant structure coming through off the top, and this is super shallow point C neutral skewing. Now there was another market that exhibited a similar type of situation, independent of the currencies, which is the December wheat. December wheat had a similar pattern, at least the initial pattern, from here to here to here and there. Now wheat actually has this pattern also showing up as super shallow but skewed to the left. Okay. Now, in both situations, this red pattern is telling us that there might be further downward move to come. In other words, a measure move strategy number 1. We can take 38% of this range, which is somewhere around here, and then 78% of this range, which is also somewhere around there, and we can short it. Maybe. Again, here is a euro currency. Here's that pattern. Now, what happened as a result of each one of these will show you how the supporting structures from the different time interval charts can allow this to be played out or not. Okay, so in the beginning you can say that, all right, I'm going to take the 38% of this big range, and again think about some preliminary short somewhere around the 38 of that range, and let me get the 78% of this range, snap it right in here, and there would be a shorting opportunity. Measure move strategy number 1, short, thanks to point C being shallow, in this case super shallow. Okay, but as you can see how these two markets will play out this theme, either coming down here and then following through, or coming down here and then failing to go down, that is. All right. So that's the mathematical area for the currency. Now here's the mathematical calculations for wheat. I'm going to take 38% of this big range and take 78% of this smaller range. We'll snap it back in. Okay, so here we have a shorting opportunity right about here to not go above that high there, to not go above point C. Okay, now what is the main difference between these two? Well, this one seems to be behaving so far. It can chop its way up to about here, won't go any higher than C, and then it can head down this way. Now the euro currency is not quite the same. This thing had a move coming up to here. It did move down here, but then all of a sudden it did this. What's the difference? Okay, the difference is the way it got up there. Okay, the way it made its way up there. This one made its way up there like this. And you want to see what that pattern looks like. Let me draw it in a different color. Right-handed skew. Question is, being a right-handed skew, would this thing stop here and drop, or would it continue on going higher? And if this thing were to come up pretty strong like this, as opposed to going up and then trying a few times and some left skew, which one has a stronger move up to these two numbers? Something like this, right? Something like this would be a lot weaker then this is a lot stronger. Okay, you don't want it to go up to that level very, very strong. Here, the currency, it went up very strong, right-handed skew. Now, what followed is that this move down did not go below that low. And the moment it gets above that high, it moves up. Where does it move up to? Well, initially, I said, well, if this 38.78 were to not hold, now we're going to do extensions. Time range wide, this is 3 bars wide, this is 5. Okay, I'll give credit to the 3 supporting a 5. Initially, we'll look at the 261 average, okay, but, okay. Now, the key is that if this thing were to go up off of deep retracements, the retracement is more important than skewing. So in this case, we got retracement deep, Now, skewing to the right, skewing to the right. Skewing says don't short it. Deep retracement says short it. Which one are you going to go by? Well, it's in conflict, right? So somewhere between here and here, or somewhere around here, do we short it over there? Well, here's where the supporting structures come in. Again, it's always off of this last leg from here to here to determine that, okay, to see if it can stop there or if it can go beyond that. So from here, not just regionally, but from here to here, all of that needs to be analyzed very, very carefully. Okay. And where would this level be? Well, once, by the way, let me go back. Once we have a right skew going up north, and this right skew would cause this to not go below here and move above there, then the 38.78 short is blown. This is no longer the valid shorting opportunity down there. Down there meaning the 78.38. But how about up over here? Like I said, okay, that area would be around the 78%. Now here's the question, will the 78 hold? In other words, 78 is right in the middle of the two 261s, somewhere around here. Will that hold? Well, it should, right? Deep and deep. But it all depends on the move coming up from here. This is very, very important to see whether it's going to stop there and drop or it's going to cut right through. So we're going to use a 70% as a reference of these two 261s. Now, we also talked about removing this second 261 temporarily, just get rid of that, and use a dominant structure and use this guy's 361, okay, which is right on top of the 78. So anywhere around the 78 is a question mark, whether we want to short it or not, as it's coming up very strongly. So let's go down to a smaller time interval chart, 60-minute chart, all sessions, okay, and then we're going to look at that. We're going to look at this move from that point, from this point on forward, from here up to here. Okay, what we're looking for are actually reasons that may give us a short. Now here's a double bottom here. Okay, we're going to use this to go all out over here and see if this can extend up to give us something. Now, what is this guy going to do? This guy's going to go all out. What does all out mean? 461. Why does it need to go 461? Well, let me rephrase that question. How strong is it going up to this guy's 460, 261, 361, or 461? Hang on, let me. Okay, so the key is this. We're going to see this pattern and see that this is a right skew. These are super shallow retracements, okay? This is also shallow or borderline super shallow. Those are the reasons why we got to go beyond this guy's 261, beyond the 3, and maybe ask the 461 for some help. Help in not letting this go any higher if you're thinking short. Otherwise, you want to read this properly and think about going long. Okay, here's the initial, well, let's take this one for example. Okay, if you got shallow or super shallow all over the place, like this one, super shallow retracement, super shallow again, and I mean from here to here, not quite 38%, and up you go. Okay, you're talking a strong trend. Even less than 50% is considered a strong trend, let alone 38 or less than 38. Okay, so what we're saying is that there's a lot of strength coming up through here. Don't fight the strong trend. Right? Barely 38%, just about there. So you got back-to-back, very, very strong moves. Okay, as you see this thing coming through, again, super shallow, super shallow. Now, question, do you want to short it here? Here meaning this brown line and this pink line, which is a 78% level, give or take. If the answer is yes, you can look for a small drop, but you got to be really careful to pinpoint that high there if you want to do it as a day trade. If you're swing trading, I would highly not recommend it. Coming up too strong, okay? Swing trade is something that you hold on for 2-3 days, at least don't do it. Coming up way too strong. Well, this thing finally did drop. Now, this thing did drop based on some influence by these, 261, 361, and also some of that 78%. But let's see what happened. This thing dropped. How far did it drop? Not too far. It tries to drop again. Didn't drop. Went sideways for a while, sideways for a while. As it's going sideways, what forms? A wider time range gets formed. Twice as wide as this or that. Twice as wide as these. All of those. So now the supporting structure is this guy right here, super shallow. Point C is redrawn where now you have super shallow point C coming into the mathematical 78%. Guess what? Not going to work. Now, if you're going to watch this from these inner patterns, if you will, by the way, this is skewed to the left right there, okay? This is skewed to the left, granted. However, from here till right here, all those inner patterns are also telling you a story. What's the story? Well, the idea is that if this thing were to go up shallow, well, with a lot of strength, then this thing will really fly. And I'm going to start from here. Dominant structure right here. Okay, now you got this little guy over here. And let me draw that little guy in a different color. Okay, and then what follows that is this green pattern. Okay, now the green pattern follows the purple or the blue, however you want to look at it. But the green pattern shows a much shallower retracement than these previous one. In other words, if you want to look at it from a back-to-back perspective, starting from here, green follows the purple. If you want to look at this from a back-to-back measure move, starting from here, the green follows the blue. In either case, the green gets shallower and skewed to the right once it breaks above there, thanks to some news items. I think it was some FOMC meeting. Well, if that's the case, this will shoot it up, making a move above this high here. Up you go. Okay, so again, this is shallower than the previous ones as we zoom through this area here, which is closely coinciding with this point B over here. So when that point B gets taken out by this news item, that's going to kick in this move. Let me draw that in. That's going to kick in the move that is off of a shallow retracement. In fact, super shallow. Okay, so that's going to kick off a move off of the super shallow retracement here. Okay, so once you get above here, you're on your way higher. Now, you also want to watch these patterns from here to here, these patterns here too. If they maintain super shallow, then yeah, now you're going higher. In other words, how high? Well, it can go as high as the 261. Okay. Now, let's keep this 261 here for a second. And go back to the daily chart. Well, before I go back to the daily chart, I'm going to go to the 120-minute chart so you can see the whole thing. Here's the whole thing. Okay. Skew to the right. Super shallow, wider super shallow, up to here. Here's the so-called dominant pattern, 361. Well, that guy 361 now gets shifted up to what? 461. Okay, and this first level supporting structure, this guy's 261 supports the dominant 461. I'm going to get rid of the 78%. Now I'm going to go back to the daily chart and put things in perspective. Dominant structure 461 gets hit. First level supporting structure 261 gets hit. And this little latest guy 261 gets hit. We were talking about a breakout trade right about there into this move 2 days later to tell us that the 78 will not be holding. Well, if this thing kicks in, will this cause a drop? Well, it's at a 461. But guess what? It's a 461 of the so-called dominant starting from here. Okay. Not good. Not good for a big drop. In fact, the reason why it's not good is that this low over here, which is at point A, again, that's the dominant because there are no 261s prior to this one. Okay. There are no single-sided extension extremes prior to this one. So this one gets this gets nominated as the dominant structure to have reached this 461. But in reality, this 461 point A is not really the dominant structure. This is actually point C of a huge pattern. Why? Because we moved above point B already. So let's take a look at this point, the green ABCD pattern. Here's the A, B, C, D that got formed. Well, how does this ABCD look like? How deep is this retracement point C here? And the question is, has we moved above here? Have we finished moving up? No. There's still a lot of movement left. So this is less than, well, right at 50%, I'm sorry. So we haven't quite finished playing our way up yet. So this is looking like you don't want to short it here because the so-called, the real dominant, if you will, is this guy's BC. And if I would extend this thing up, it'll be way up there, all right? So this one hits the 461, and could there be a small drop? Yeah. But by looking at these patterns here, deep, deep, super shallow, right? This is accelerating to the upside. Super shallow seen on the 60-minute chart only on this last one. Otherwise, it's bar to bar. So we're talking about a move that's very, very strong here. Obviously, it failed at 38.78. Actually, 78.38 was here for a short here, but no follow-through, thanks to skewing over there. And then when it flipped around here, it suddenly started to move up. So again, a failure of a 38.78, as shown by this pattern that I'm drawing in right now. Okay, failure of following through to the downside, that is. Now, why is that? Partially to blame is this guy right here. I'm showing you right here. If this is shallow or skewed to the right, starting out from there, which is a very, very strong pattern, then this type of shorting to go against this one shown in red is usually not going to be successful, usually. All right, let's see if there's any questions or comments. Okay, look at Baidu, probably been, okay, let's look at Baidu. Let me take a look at, compare the chart of wheat before we do that. Okay, here's wheat. Again, wheat is starting off here. One thing about wheat is that this is a little bit lower, deeper retracement. Not much, but it's at least a little deeper. But still, that's not the thing. The thing that we want to look at is that if this 38.78 short were to hold, thanks to the A, B, super shallow point C, D here. If this thing were to hold somewhere around here and not go higher than point C, then the key is to see that the move coming up to that area should be a weak move here. From here to here should be weak and remain weak to knock it down, if you will. So let's take a look to see if that's true. Okay, we're going to start with the daily chart, and then we're going to go down to a smaller time interval chart. And then mathematically, the 3870 is right here. All right, but what we want to do is look at the moves. What are the things that we're looking for? Well, measure moves, and we're looking for the depth of the measure move. Here's one measure move coming up. Here's another measure move coming up. I'm just drawing them in and erasing them, okay? Here's another one following that one. And finally, here's another one. What do all of those things have? Well, what they have is at least a very deep retracement. Okay, these are all, this one's not that deep, but then we got deeper over here. So with all this deep retracements, we were unable to fly all the way to the north side like we saw in Euro currencies. So this thing actually held meaning 3878 zone was holding. And more importantly, this high point here, which is point C, never got taken out. Now, where do you actually short this thing, if you will? This is where you want to go down to a smaller time interval chart, as these bigger patterns don't give you any particular entry. Now, the smaller time interval chart entries can help you pinpoint the moves a lot more cleaner, because you don't need to rely on such a big stop loss due to the smaller nature of patterns. So I'm going to go quickly down to the 60. Now, you can look at this from a day session or all session. Okay. Here we see about 61%, even deeper here. This is basically running in place. By the way, when you see this first one here, don't short it yet. Don't short it yet. Why? Because the jury's still out. This green pattern came after this red pattern. This is shallower than this first one. Yes, it's not that shallow. It's still more than 50%, but technically it's still shallower. You don't want this to happen. Okay? So after this green pattern, as shown here, don't do anything. Okay? When the green pattern shows up, and the blue, the thing that I'm showing in blue shows up, aha, very deep here. If this thing moves above there, oh, completion of a blue pattern, blue point C is a lot deeper than the green. Okay, good. Now you got this green one was shallower than the one preceding it, shown in red. But the blue one, which follows the green one, is now back to deeper again. That's good. This uptrend now is starting to wane. Okay. In fact, this one never went above that high there. Okay. So that one was not really okay. So here's the key. On its way down here, we're going to try to short it. Now, how about shorting it on the way down here? Well, let's compare the route here, route number 1, and route number 2. In other words, you see a high over here that you're going to short, but you don't want to short right here. You want to take secondary entry short. Either this route here or this one. Now, again, number 2 followed through, number 1 did not. Let's take a look at those two routes and compare the difference. We're going to go down to a smaller time interval chart, 30-minute chart. Okay. On this 30-minute chart, what do we see? How deep is that retracement? This is the dominant structure here. Okay. Supporting structure, here's one, here's another one here. Now in this case, the dominant structure is of a deep retracing type. the dominant structure on this move here starts off shallow and skewed to the right already. Okay, so that's a little bit better. Better for this to short below here and then follow through down there. This red one, although deep, is skewed to the left, the dominant that is. Okay, let's take a look at that first one a little closer. 15-minute chart. Okay, so this one, these colors are just arbitrary. Can anybody see this deep retracing, left skewing situation right there? Coming off of that, when you're down to here somewhere, it's a little uncomfortable to remain short, especially when moves from here to here have extended to their 261s, because the dominant is skewed to the left by quite a bit, okay, and pretty deep, 78%. So if you want to go short below here, be careful. If you want to short below here, I'll go short below here. Deep and skewed to the left, and then skewed to the right, correct? Not really. There's something between here and here that is not accounted for, okay? In other words, there's this guy over here, also skewed to the left, and then skewed to the right here. Now, those two patterns here are going to give us some sort of trouble. Why? Skewing left, 261s here. This is skewed to the right. Here's a 261 over here. And the more dominant pattern shown right now, this guy's CD leg is overstretching the AB, even though point C is skewed way to the left and very deep. This is not a very good place to remain short anymore. Okay. So this down move was it's kicking and screaming down move. How about this down move here? Right away you have right skewing here. Now you can short it right there on the 21st, because this took a few shots at these highs here. Remember, the highs here somewhere is at 38.78. So by seeing this coming down right there, then that can shallow, skew to the right. Let me see if it's super shallow. If the dominant starts off shallow or super shallow and it follows through, then that can give you a big move down. Borderline. Okay, borderline super shallow. So from this point on forward, once you break below here at what, 36, 34 somewhere, then down you go. Okay. And the reason why is that this downward move will not be a good idea. Let me start in. This is super shallow, right skewing, okay? When this thing goes all out, what's all out? 461. This guy's 461 usually won't be a good, in other words, don't buy the 461 for a bounce. Not off of a super shallow dominant. This is coming down too strong, okay? You don't want this to be super shallow and skew to the right and extend them down to buy, okay? Especially when it's acting as a dominant. Well, you might argue, wait a minute, that's not dominant. This guy's dominant. Isn't this guy dominant? Yeah, this guy in black is more dominant than the one in blue, okay? But the black pattern isn't addressing areas right about here. What do I mean by the black pattern not addressing? Well, the black pattern, if it were to address something, we will be referring to the black pattern's 261. And that is way down there. Okay, so this is not, the black is not doing anything to help it around here in terms of lending its deep retracement to help out this super shallow situation. So in other words, the super shallow here, it's going to kick off a real strong move due to the coast is clear for it to run. Okay, anybody have any questions on that? Okay. So that's what you want to do. We want to make sure that the coast is clear and you can run, and that will kick off the move. When that kicks off the move, so what happens is that when the move is going very, very strong, you have a chance of getting on a good entry. Let's say getting right here, stop loss above there, and you can really make good risk reward ratio. Okay, so that's what we're looking at in terms of the difference between these two. The difference between these two is that this is a fast move down starting out. This one had some deep retracement without following through. Okay. So that's the difference between the tale of two setups, the two measure move strategy number one setups. Okay, let's take a look at Baidu. We talked about Baidu a long time ago. Baidu's always been a strong stock, going way back. Okay, why is that? Well, the weekly chart starts out over here, and as you can see, time range got wider, 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 wider. And the reason why getting wider and wider means it's going stronger and stronger is that once you get wide enough to where the widest ones will overwhelm these smaller ones, 461 will have no reach, if you will. Will cannot hold it, put it in check, hold it in check. So it goes up, it goes up. No, you got even wider over here, time range wise. Okay. So when you have this wider time range over here, wider than what? Wider than the previous time ranges, you kick it off another notch, if you will. Okay. So from here, here's point C, here's point B. My point A, my point A is, even my point A is over here, that's still super shallow. Okay. So this is always super shallow all over the place ever since this move started. Less than 38% is defined as super shallow. Actually, less than 50% is pretty strong already. But when it's less than 38%, now again, I'm not even taking it all the way down. If I were to take it down to over here, of course it's super duper shallow. Okay, so this, no matter how you cut it, this was a benign drop. This little drop here, going up over here, is going to be somewhat benign. But let's take a look at that piece right there more carefully. Double bottom, followed by this pattern over here. Okay. Now, once this thing cleared this high over here, we'll call that point B. Now, which one's a lower low? Okay. Once we clear point B, then technically speaking, this has cleared it already, and it's going to want to go higher. This one seems to be lower than that over there, so this gets the treatment, and that can be called right-sided skewing. Okay, that in itself is telling us that, oh, this thing may be going up real strong after we break above point B. But let's take a look at the daily chart and break it down. Break it down in terms of what we see here and there. Okay. Here's a double bottom. Second bottom is a little lower than the first. From here to here, what are we observing? We're observing this, and this, and this, okay? How deep is this retracement here, there, and there? Now, the magic thing is that super shallow, right? This first one here, I'm going to use a 38%. This is not 38. This is a little deeper than 38. This is deeper. How about this guy over here? Okay, it's right at 38. Okay. And once it gets above over here, some of these previous patterns, extension extremes, the 261 average caught wind of this thing and started to bring it down. As it makes its way down over here, remember, once it broke above there, the widest time range happened, and theoretically, you can do a breakout above here if you're willing to take the heat, but should not go below that low there, okay, on the larger perspective. But let's say you don't want to get in long over here because the move from here to here is not that strong. Well, if this move from here, if this move from here to here to here is not that strong, of course you'll pull back. And then after that, you want to look for the move from here to here to here to here and see if that green part is stronger than this blue up part, okay? That's what you want to do. That green, let's take a look at this green portion. The green portion is a portion that is now the new attempt to go higher, if you will. Remember, it cleared this high already. So theoretically, we are in the good. So what goes on between here and here? Again, let's analyze trend strength. And two lows here. Double bottom, dominant. Now, right here, it's an inside bar outside. Can I make something out of this? How high is this high here? 84.59, 84.58, 59. This is actually higher than that high. Again, higher than that high. So this is an inside bar. This is an outside bar. At best, I can call that a 2-bar wide time range. Okay, not too good. Not too useful, I should say. Let me go down. If I go down to the 60-minute chart, I can make something out of it. Between the 7th and the 13th of September. Okay, now I see something. You can always go down to the 60-minute chart to clarify things. Okay, from this low over here, we have this. How deep is that retracement? How deep is that one? Once you get shallow, then you're in good shape. The one that we were concerned about or confused about was this time range over here. Remember, this is one penny higher than that high over there. How wide is this time range here? Is it twice as wide as all these other ones here? Yes. If the answer is yes, then point A is now over here. Well, guess what? Super shallow. Super shallow right there, going up. As we move up over here, we have another one that is, I'm not sure if it's wider, by twice as wide, but pretty darn close. At the very least, we can call it a shallow retracement that follows a super shallow retracement. What we're talking about is that there's a lot of uptrend strength here. Okay. 38%. So once we broke above here, now you also want to look at this guy over here if you can. This one over here, followed by that little guy right there. Right there. If you can open it up to a 30-minute chart, what happened right there as we go off the chart, off the screen here? Okay, it's pretty strong, right? So that's why we continue. Now, as we continue up over here, this little guy over here, it moved up to a wider one over here. Well, what's a wider one tell you? How wide is this? Well, here we go again. Here we go again. Super shallow, right? So super shallow follows a super shallow. That's very strong. That's very strong. You can do a breakout and follow through nicely. Super shallow. What we just did here, let me draw it in diagram form, and then we'll look at this again. In diagram form, the weekly chart shows that we've broken through with a wider time range, super shallow point C over here. And then on the daily chart, somewhere it moved down like here, and then from here to here, we have super shallow. As if the green pattern is not strong enough to move it up. The blue pattern here, super shallow, is what really kicked off the move, which is what happened to Baidu. So going back to the actual Baidu chart, weekly chart shows wider time range here. Okay. Point A is, well, it's super shallow no matter how you cut it. Okay. And again, think bullish. Once we break above that, how strong is this move from here to here? Can it follow through? How strong is this move from here to here? The answer is that last piece here, very strong, very strong. But the stage was set already for this to be a very strong stock that never got weak, almost like Apple. It really never got weak because all the moves from here to here, well, actually, from here to here was not that strong. From here to here, the recent move up, that was a lot stronger. Okay, this was the move to break above this high, confirming to the world that, hey, we're going higher. When this pullback happened, this pullback will give it another assault that's even more so. Okay. Again, we keep on seeing super shallow on newly developed supporting structures, 60-minute charts. Then you know this is really, really continuing to go higher. So Baidu is just not letting up. Okay. You can even see it on this chart here. And again, you just want to eyeball the move and see how fast this, I'm drawing the blue part versus the green part. Which one seems to have shallower retracements in them? The green, right? Green has a lot of super shallow situations. So that's the one that really is flying off the handle. Just like, well, good old Apple, again, is at 288. So these guys also, well, like super shallow right there. Okay, that everybody see that little wiggle? That's the super shallow. Notice how this thing actually went beyond the 461. It just would not let up. I mean, that's a ridiculously super shallow wiggle pattern over here. So once you get above there, you can buy it over here, even if you're late into the ball game. Why? Because right here you're already above there somewhere. And again, let's think about, well, we're looking measure move strategy number 2. I say we're looking because here's a weird double bottom. Okay, how deep is that? I mean, this is very deep, of course, double bottom, but it's skewed slightly to the right. You follow that with a super shallow. Okay, now you're going up. So this green following the red has the measure move strategy number 2 effect, if you will. One penny above the high here, B, off a super shallow point C, can buy it over there. We talked about this low being pickable if you know how to do all these extensions coming down over here. But even up over here, you can still buy it around 265 and make about 20 bucks a share, going up to the high 80s. Because the strength is very strong. Strong trend. All right, let's see if there's any questions. You say sometimes extremely shallow has too cute and might come back down. So should we buy on a breakout with a very shallow without looking for more clues? If you really want to prevent that, you should not. You should look carefully. Okay, this could be very cute, but what happens between here and here? Let's take a look at that. That's a good question, Richie. From here to here, from here to breaking below above there. What is going on in these two bars patterns that can tell us it's going to really fly, or if it's going to do one of those dipsy-do to come back and bite us? We will look at the smaller supporting structures, and again we'll want to see if that move from that pivot low to above this little pivot high will show a burst of energy going through, or something that could be problematic. All right, let's go down to it's on 13th of September. Let's go down to a 30-minute chart. Okay, the 13th, right over here. Okay, here's a little. So the key is to see, this is a super, let me squish it together, as you can see. Well, actually, if you did look at the 30-minute chart, you would have gone in a lot earlier, say right about here, okay? Because you already got in, you already witnessed a super shallow retracement right there, okay? You would have gone in over there because you would not have waited until that high happens. Whenever you see a super shallow followed by, whenever you see a strong right skewing followed by a super shallow, from here, it bursts bar to bar right through here, pull back reluctantly over here. Once it stops over here, you can buy it right there at 252 at the close. Okay, your stop loss is below there. So if you had this super shallow witness on the 2nd and 3rd of September, you could have gone in over there, and then you would have been up again, super shallow, continuing. What I mean is this: from here to here. Is that super shallow still? If the answer is yes, then keep going, right? Super shallow followed by super shallow. Okay, and then you have this wider time range here. This is wider than that one, 2 to 1. And then you draw again, super shallow. This is left skew. Okay, but by the time you get up to here, you do have a wider time range, wider than twice of this, all the way down. But do you want to go long over there? What happens between here and here? Okay, if you were watching the 30-minute chart, you would see that you may or may not want to buy it one tick above that high right there. You may or may not want to buy it. Okay, why not? If you did buy it above here, your stop loss is below there. But because this is super shallow, it may go up there and then drop down like this before going up, right? That's the thing that would get you stopped out if you bought it where the arrow is. And that may be true because here's a 261. See this little guy right there? What was that guy's 461 at? When a 261 supports a 461, even on this little guy here, even when a super shallow breakout, okay, again, 461 lands right there. 261 of the more dominant pattern lands right there. Well, what does the average give you? Right here. That's right after the breakout above here, right? What should happen? It should drop. Now, there's a fight between, now you might say, this little guy here, it won't drop much. And you would be right. But still, when you have a 461 supporting a 261 dominant, yesterday we watched that other stock that did that on a huge gap down. But this one did not gap down. What it did was it got knocked down temporarily down to here. By the time it got down to here, the potential time range would be wider than this guy here. So this guy will be knocked out. The guy that gave us a 461 will be knocked out. Okay, so what does that mean? That means, okay, he gets knocked out, nothing. What that means is, from here, you get this, and then from here, you get that. Well, what does that look like? That looks like a right-handed skew by a lot. This is the green one that I mean, okay? What I'm saying is that you can do a breakout above green point B, stop loss below point C, as opposed to buying above here on a breakout, a stop below there. Okay, in other words, you can modify it a little bit by stepping away from buying it over here due to that little pullback, which will be a little bit of a nuisance. But once you flip around, by the way, point C never got below here, so you won't be stopped out. But if you want to not, if you want to take less risk, you get a little bit later getting over there, stop loss below here, this will give you a lot more cleaner, faster move, thanks to this being so skewed to the right. Okay, up you go, right? So you can look down on a smaller time interval chart and Richie and solve that issue. And by the way, you can see that coming already. When this thing was knocked down, thanks to the 261, 461 combo, it came down here. It did a 1 bar up and a 1, 2, 3, 4. This is left skew coming down here. This left skew coming down is a move coming down against a strong up move. This left skew here, point C, this is not going to go down that much further. At the very most, it can go down 261, 361, or even 461. But the 461 is still above here, Richie. So this pattern showed up. If you did a breakout above here, it went up. Now it came down against you slightly. Your stop loss below here. This guy's 261 is here. His 361 is here. It won't go down to the 4. This is too left skew, and it is way too much in a bullish environment. So this answers the question, what if this little thing was a cute little dipsy-do thing over here? Let me show you what this dipsy-do was referring to. This little pattern right here. That little pattern right here, how do we know this is going to stay here and then fly, or stay here and then do a little ugly stuff before flying? That, by opening that part up and seeing how super shallow right-handed skewing and all that is found, then you know that those smaller supporting structures are supportive of further bullishness. All right, let's see if there's any questions or comments. Okay, but wouldn't you take extreme down from the high to that super shallow low to see if it would go lower? Or just worry about the move up before buying? Well, by going down to the smaller time interval chart, if you're able to do that on a 30-minute chart, you can see that the bigger prevailing thing, in this case, the overall bullishness of Apple, going back to the weekly chart, should lift you in the right direction should you find yourself on the on-ramp of a very fast-moving highway. Okay, going in the right direction, going north. So this was a fast ramp going up north. This was a slow ramp going south. That's a weak down move followed by a strong up move. And of course, the up move up is the direction that this entire market is in. Now, the overall economy is still considered bad. People are still losing jobs. However, the stock market in and of itself seems to be still, bullish, especially for these stronger stocks. The weaker stocks, I can't say. But for the stronger stocks, they will defy gravity compared to the overall market. So again, that measurement strategy number 2 thinking of skew is still a very, very practical thing to look for in a smaller time interval chart, the 60-minute and a 30-minute chart. And you should not be fixated on just the daily and the weekly. If you're a swing trader, look for a 60 and a 30 to give you a little bit more of the heads up in terms of what's going on in the inner patterns, if you will. And big skewing and stuff like that also plays a role. And the reason why this is a weak downward move here, again, deep and skew to the left, point C. Very fast move up, reluctant drop, took a long time to get below B. This is not a very, very strong down move due to point C skewed so far to the left. And again, very, very strong overall chart. All right, any final questions, comments? Okay, we'll stop recording here.